Welcome to the Radio Revenue Podcast. Today, we're taking a deep dive into News Corporation, a true titan, really, in the global media and information services landscape. And this isn't just about, newspapers. It's about understanding a really diversified giant. We're talking information services, digital real estate, book publishing, the works. Our mission for you, our listener, is to unpack their recently filed FY25 Form 10-K. We want to pull out the most important nuggets of knowledge, maybe some surprising facts too. Think of this as your shortcut, really, to being genuinely well-informed about one of the world's most recognizable media empires. So let's start at the very core of News Corp. It's news and information services. That's mostly the Dow Jones segment and its global news media operations. What's truly fascinating, I think, is how a company built on, traditional news has become such a digital powerhouse.
Yeah, absolutely. And that's where Dow Jones really shines, isn't it? It's a global provider of premium news and business information, and they serve both individual consumers and, huge enterprise clients. When you think Dow Jones, names like the Wall Street Journal, Barron's, MarketWatch, Investors Business Daily, they immediately come to mind. These aren't just news outlets. They're kind of the standard bearers in financial journalism.
And their shift to digital consumption, well, it's undeniable. The Wall Street Journal, their flagship, saw something like 70% of its digital visits coming from mobile devices in FY25. 70%. Even more striking, maybe, is their subscriptions. As of June 30, 2025, out of 4.5 million total WSJ subscriptions, over 4.1 million were digital only. Across all Dow Jones consumer products, total subscriptions hit 6.261 million, with 5.719 million being digital only. That really shows a successful transition to digital-first delivery, wouldn't you say?
Definitely. And, beyond the individual consumer, Dow Jones's professional information products are incredibly robust. They cater to really high-stakes enterprise needs. Take Dow Jones Risk and Compliance, for instance. They provide crucial data and solutions for anti-bribery, anti-money laundering, trade compliance. They're even leveraging generative AI for advanced tools like their integrity check automated reports. Pretty cutting edge stuff. Then there's Factiva. It's a leading global business content provider. Think about this. It aggregates around 33,000 global news sources from over 200 countries.
Wow, 33,000 sources?
Yeah, in 32 languages, serving over 1 million activated users. It's not just a database, it's more like a global intelligence hub.
Right.
And Dow Jones Newswires. It pushes out real-time business news, averaging over 17,000 news items daily. That's not just read by financial pros, it actually feeds directly into trading algorithms.
So that's Dow Jones, a massive information backbone. But News Corp's broader news media segment has an even wider global footprint, right? In Australia, for example, News Corp Australia is just dominant. They've got nearly 1 million digital subscribers. Plus, powerful print titles like The Australian and The Daily Telegraph, reaching, 4.6 million Australians weekly. And their digital site, news.com.au, also pulls in 12 million unique monthly users. Huge numbers down under.
They really are.
Then you look at News UK publishers of The Sun, The Times, The Sunday Times. Together, they account for about a third of all national newspaper sales in the UK. Their brands reach something like 60% of adult news readers there. That's 27 million people.
Yeah, massive reach.
And closer to home, the New York Post. Oldest continuously published daily in the U.S., I believe.
That's right.
Its digital network, nypost.com, page6.com, Decider.com, averages nearly 90 million unique users per month. And they even have radio, like Talks 3RT, the leading sports radio network in the UK. It's extensive.
It really is. And what's truly fascinating here, I think, is how these, established media companies are strategically using their premium content. They're aggressively embracing a digital distribution and even integrating advanced AI solutions in their professional services, which kind of brings up an important question. As these giants adapt to these rapid tech shifts, what are the competitive consequences they're facing?
That's a crucial point.
Yeah.
Because the digital shift and, the rise of AI, they aren't just opening new doors. They're creating some pretty significant competitive pressures, too.
Exactly. News Corp faces stiff competition from, a whole load of alternative news sources, new programmatic ad channels, and maybe most critically from AI aggregator. That's a big one in the filing. You see how changes in algorithms on large digital platforms, like what happened with the Sun's traffic in the UK recently, can just directly hit visibility and revenue, and often with little warning.
Right. They have no control over that.
None. But perhaps the most pressing threat they highlight is the unauthorized use of News Corp's intellectual property, specifically by generative AI tools, using content without permission or, crucially, compensation. This isn't just a legal headache. It's a direct challenge to their whole business model, which is built on creating and owning valuable content.
Okay, let's move on from content creation for a minute. Let's turn our attention to another really powerful engine within News Corp, their digital real estate portfolio. This segment has truly been a growth powerhouse.
Yeah, it really has. This segment is basically anchored by two major players. They've got a 61.4% interest in REA Group in Australia and an 80% interest in Move, which operates Realtor.com in the US. Together, they form a pretty formidable presence in the global digital property market.
And REA Group especially shows remarkable market leadership in Australia. Their main site, realestate.com.au, averaged over 132 million monthly visits in FY25. And get this, users visit that site 4 times more often than its nearest competitor. That's stickiness.
That's real engagement.
They've also strategically expanded into financial services through Mortgage Choice, diversifying their revenue streams within that whole real estate ecosystem.
Right. And then on the US side, Move's primary asset is Realtor.com. This platform gives consumers access to roughly 151 million properties. And what's particularly impressive is its accuracy, its real-time nature. It displays nearly 100% of all MLS-listed properties. That's the main database agents use, right?
Yeah, the multiple listing service.
Exactly. And 94% of the for-sale listings are updated every 10 minutes.
Wow.
Realtor.com and its mobile sites pulled in about 72 million average monthly unique users. Their revenue mainly comes from innovative lead gen products like RealPRO Select SM and referral services like ReadyConnect Concierge SM, connecting agents with buyers and sellers.
And those services has certainly fueled strong financial performance. Total revenues for digital real estate services were up 10% in FY25 compared to FY24. And segment EBITDA grew by an even more impressive 18%, a solid growth.
Very solid. But if we connect this to the bigger picture, despite that impressive growth, it's really crucial to understand how sensitive this segment is to macroeconomic factors. The company's own filing points out the, quote, continued negative impact of things like persistent inflation in home prices and high interest rates on the U.S. real estate market in FY25.
Ah, right. So that had a direct impact.
It did. Specifically, it led to a 9% decline in Move's lead volumes. So this highlights the inherent volatility, the external pressures that even a market leader faces. It shows that no sector, no matter how digitally advanced, is totally immune to the wider economy.
So what does this all mean for the future of this segment then? I guess it suggests that continuous innovation is absolutely critical. Plus, the ability to provide accurate, useful services that adapt to what consumers and real estate pros actually need as those needs change. Okay, let's shift gears now. Let's look at a more classic medium, but one that's also definitely embracing the digital age. Book publishing, primarily through HarperCollins.
Right. HarperCollins holds a really significant position. They're the second largest consumer book publisher globally. They have extensive operations, like across 15 countries, and boast over 120 branded imprints. We're talking well-known names like Harper, William Morrow, HarperCollins children's books, and also big Christian publishers like Zondervan and Thomas Nelson. It's a truly vast literary empire.
And the catalog is just incredibly rich, isn't it? They manage over 250,000 publications in 16 languages, featuring works by iconic authors, Harper Lee, George Orwell, Agatha Christie, J.R.R. Tolkien, Dr. Martin Luther King Jr., plus beloved children's series like Goodnight Moon and Little Blue Truck. It's a testament to the enduring power of stories.
It really is. And despite those traditional roots, HarperCollins has shown strong digital adaptation. Digital sales that includes ebooks and audiobooks represented roughly 24% of their global consumer revenues for FY25. And pretty much all new titles are now available in digital formats right away. It shows a successful pivot, really, to modern consumption habits while still managing that huge backlist.
And they're still hitting home runs with new releases. In fiscal 2025, HarperCollins US had an incredible 164 titles on the New York Times bestseller lists, print and digital, and 19 of those hit #1. Think about that range share. The Memoir Part 1, J.D. Vance's Hillbilly Elegy, Wicked by Gregory Maguire, all major successes that year.
It does raise an interesting question, though, about the resilience of traditional media in this digital world. HarperCollins shows strong digital adoption, continues to churn out bestsellers, but they still face competition, not just from other publishers, but from completely different media forms, movies, TV, magazines, mobile content, you name it.
Right, competition for eyeballs and time.
Exactly. Plus, the barriers to entry in publishing are relatively low, which means new competitors can always pop up, keeping the market really dynamic.
And it's important to note, too, the filing mentions that recent economic uncertainty and lower consumer confidence have contributed to, well, softer consumer spending in the U.S. book publishing industry. Even a beloved industry like books isn't entirely immune to those broader economic trends. Okay, let's zoom out now. Let's take a look at the big picture financials for News Corp's fiscal year 2025. How did all these diverse segments actually contribute to the overall performance?
Well, overall, News Corp's total revenues increased by $200 million, or 2%, for fiscal 2025, reaching $8.452 billion. This increase was primarily driven by, as we discussed, higher revenues in digital real estate, continued growth in circulation and subscription revenues at Dow Jones, and also improved performance in book publishing thanks to higher digital book sales and better returns management in the U.S. But this positive momentum was partly offset by lower revenues in the news media segment. That was mainly due to transferring some third-party printing contracts and a dip in advertising revenues.
And when we look at profitability, the numbers certainly jump out. Net income from continuing operations soared by 71%. It increased by $269 million to $648 million in FY25, up from $379 million in FY24. And total net income saw a massive 279% increase, reaching $1.34 billion in FY25 compared to $354 million in FY24. That's a really significant jump.
It is striking. But when we connect this to the bigger picture, while that increase in total net income looks huge, it's really crucial to understand there was a substantial one-time impact. The company recorded $692 million from reclassifying the Foxtel Group, their Australian pay TV business, to discontinued operations.
Okay, so that inflated the total net income number.
Exactly. That one-time event highlights a strategic shift, streamlining their focus. It doesn't necessarily indicate that operational performance jumped quite that dramatically year over year. Still good, but that reclassification is a big factor in the total net income figure.
Got it. And from a liquidity standpoint, how are they looking? Cash and cash equivalents increased to $2.403 billion as of June 30, 2025. That seems pretty strong.
It is. They do maintain about $2 billion in total outstanding debt, but that cash position provides a solid cushion.
And they're active with share repurchases too, right?
Very active. In FY25, they repurchased 5.3 million shares for $150 million. And then, just after the fiscal year ended, on July 15, 2025, News Corp announced a new $1 billion stock repurchase program. That's on top of the roughly $310 million they still had remaining from their 2021 program.
Wow, okay. And dividends?
Dividends remain consistent. 0.20 cents per share across FY25, FY24, and FY23.
So that clearly shows a commitment to shareholder value, doesn't it?
Yeah.
Through both the consistent dividends and these pretty substantial share buybacks.
It does, even as they manage significant debt. It's interesting to see how they balance those capital allocation decisions, returning cash to shareholders versus investing in their core businesses for future growth. Or they're trying to do both.
Right. So with all these impressive numbers, these strategic moves, what about the risks? What could impact their future strategy and, knock them off course? Because no company of this scale operates without significant challenges, and News Corp is certainly no different. Let's unpack some of the big risks they highlighted. Many seem common across global media today.
You're absolutely right. They explicitly talk about a highly competitive business environment across all segments, and that's made worse, they say, by rapidly evolving technologies like generative AI. Generative AI is clearly a major concern for them. The filing points to risks like content commoditization.
Meaning their content becomes less valuable.
Potentially, yes. Or reduce traffic to News Corp's digital products if AI tools just scrape and use their content without permission or payment. And even the risk of AI misattributing incorrect information to their trusted brands. That could damage reputation.
That's a huge risk for a news organization.
It is. It's a direct threat to their core asset, their content and credibility. Additionally, you have the large digital platforms commanding a huge share of the ad market and influencing content visibility through their algorithms, which, as we said, are totally outside News Corp's control. So strategically, what are they doing? They're actively pursuing licensing deals with large platforms for content use. They're developing new products using AI themselves to enhance insights, and they're investing heavily in data and tech infrastructure to try and differentiate their brands.
And on top of those competitive pressures, there's the whole complex and rapidly changing regulatory landscape. That must be a minefield globally.
It really is. Data privacy and security is a huge one. News Corp operates worldwide, so they're subject to this whole maze of evolving laws. Think CCPA in California, GDPR, and UK GDPR in Europe, the AU Privacy Act in Australia.
It keeps changing, right?
Constantly. They even point out strict new laws, like California's Age-Appropriate Design Code and New York's Child Data Protection Act, which just went into effect recently, these impose really strict limits on processing children's data.
And it goes beyond just data privacy, doesn't it?
Oh, yeah. For instance, their Dow Jones Energy OPIS business operates under the EU benchmarks regulation. That shows a highly regulated niche within their data services. In the UK, they face ongoing oversight from bodies like the Press Recognition Panel and the Independent Press Standards Organization, IPSO, the main press regulator. There's also new legislation like the Digital Markets, Competition and Consumers Act 2024, which addresses foreign influence on UK newspaper enterprises.
Right.
Plus, their UK radio stations are regulated by Ofcom, needing licenses and adherence to content standards. If you connect this to the bigger picture, it's clear News Corp operates in this incredibly dynamic and highly regulated environment where tech often outpaces the legal frameworks.
So they have to be constantly vigilant.
Absolutely. Their proactive approach to cybersecurity, using frameworks like NIST and constant monitoring of regulations, are critical. But the evolving nature of AI and data privacy laws means constant vigilance and potentially significant compliance costs ahead.
And there are plenty of other operational risks mentioned too, right? Like macroeconomic stuff.
Yes, definitely. Macroeconomic headwinds, economic weakness, geopolitical tensions, inflation, high interest rates, these continue to affect consumer spending and specific markets, like U.S. real estate, as we saw.
And supply chain issues.
Still a factor.
Yeah.
Volatile paper prices, reliance on third-party printing and distribution partners, those pose ongoing challenges, plus labor shortages in some areas.
Or maybe most fundamentally for a media company. Reputation.
Hugely important. Their brands and credibility are key assets, so they're vulnerable to perceptions of bias, unreliability, or even, as we mentioned, AI misattributing things to them. That could be devastating.
And like any big company, just finding and keeping good people.
Exactly. Attracting, retaining, and motivating highly skilled employees is a constant competitive challenge.
And one last structural point you mentioned earlier.
Right, the ownership structure. The concentration of ownership by the Murdoch Family Trust, holding about 40.6% of the voting Class B common stock. This, combined with their existing anti-takeover provisions, is a really critical aspect of their governance. It influences corporate decisions and potentially discourages third-party takeovers. It's a significant factor in their long-term strategy and direction.
So as we wrap up this deep dive, it's really clear that News Corp is... well, it's a complex global entity as both a pillar of traditional media and a forward-thinking digital innovator. And is navigating a landscape that's changing incredibly fast.
Yeah, they're balancing some significant opportunities, especially in digital content and real estate, with some very real challenges. A highly competitive environment, technological disruption from things like AI, strict regulations, macroeconomic uncertainties. It's a lot. Their ability to keep innovating while also protecting their core intellectual property, that's really going to shape their future trajectory in the global information economy.
So what stands out to you after this deep dive into News Corp? How might these trends, the AI challenges, the regulatory pressures, the digital shifts, impact other media companies you follow? We definitely encourage you to reflect on that interplay between technology, regulation, and market dynamics in today's media world. It's constantly evolving. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.